the Asia Pacific Business Forum podcast, exploring business, policy, and personalities across the Pacific region.
Hello, my name is Dick Drobnick, and I'm the host of the Asia Pacific Business Forum podcast. And today I'm delighted, very pleased to have this podcast conversation with Andrew Sheng. Dr. Sheng is a former central banker in Malaysia and in Hong Kong. He was the chairman of Hong Kong Securities and Futures Commission. He's an advisor to major Chinese financial institutions, a distinguished fellow at the University of Hong Kong's Asia Global Institute, and chairman of the Georgetown Institute of Open and Advanced Studies at Wawasan Open University in Penang, Malaysia. Andrew, welcome to this podcast conversation. I'm delighted to see you.
Thank you, Richard. It's great to be, on this podcast.
So as in my invitation, we want to talk a little bit about how the Trump II government is forcing the world to move from a rules-based, most favored nation trading system to an unpredictable American threat-based environment. And wondering what you think, how the countries in Asia, in particular China and ASEAN countries, will be adjusting to this new system.
Thank you. Well, America is still number one and will be number one for quite a while. I've always said that America's number one's position is for America to lose, not for somebody else to win it. The real issue is that America, from this side of the Pacific, sees America as, very exceptional. It's a continent that is protected by the Pacific and the Atlantic Oceans. It is, very richly endowed, very open to the world. And in the 20th century was rightly so the American century. However, I think Mr. Trump has decided to reverse somewhat the rule-based order, which was kind of, the global framework since 1945. And, that was the idea of rules-based, free trade, free flow of capital. These ideas became entrenched, also democratic, entrenched in global, especially the global South, for quite a while. And I think in hindsight, it became very clear that this environment was not quite sustainable for reasons which I'll describe later. But let me say this, that because the ideals were so strong, I was a believer. I was a very strong believer in free markets. I worked in Hong Kong, which I still believe is one of the freest markets in the world, very much the English common law regime. The idea that free markets do help countries develop was very much entrenched in the Washington Consensus. And having worked in the World Bank for 5 years after, I left the Central Bank of Malaysia and then going to work in Hong Kong, the Monetary Authority, and then the Securities Commission, it became very obvious to me that free markets, do push prosperity, but it has one precondition, and that is the rich should somehow help the poor, and this is done either voluntarily or through government taxation. And if the rich do not help the poor, then you get a growing social inequality. So, this part was the precondition that was somewhat violated in the last 40 years in the United States, which the rich getting richer and the the lower half of society feeling, including the middle class, feeling disenfranchised to some extent, which was one other precondition, which is also very obvious, which Mr. Trump did not consciously say this, but his tariff war actually sparked the debate. The issue fundamentally is that America cannot carry on giving global public goods. You can call it the defense umbrella, you can call it the maintenance of peace around the world, including, you know, major contributor to World Bank, United Nations, etc., without very heavy consequences on the American budget. And if we all agreed, as I think globally, there is now more or less agreement that the minimum level of global taxation should be 15%, including in offshore financial centers, it's not unreasonable to say that maybe the global tariff rate for everybody should be, let's say, 10%, but maybe a special exclusion for very small transactions for, most people, including in delivery of your Amazon.com
De
emailing.
minimis.
Yeah, e-commerce. So, to a large extent, for America to move the tariff rate from near zero towards today, probably an average of around 16 to 20% is understandable. But I thought that the way of execution of this was kind of a little bit of, machine gunning everybody in the room.
Well,
So,
especially America's friends.
exactly. That's what I'm saying. If you shoot your enemies, that's fine, but your friends. And so we are in Kissinger's territory. It is, what Kissinger said, brilliantly. It is dangerous to be America's enemy or foe, but it's fatal to be America's ally. And so the result is that all those countries that had been allies to America, especially in the Cold War period, people like Thailand, which strongly supported America during the Vietnam War, and Indonesia, which always felt it's a very strong friend of America's, felt, wow, what's going on. And so, to a large extent, I think the region has kind of become slightly shell-shocked. And the issue can be summarized very simply by a very old Malay proverb, which is Perang Gajah, which is this is a war of elephants. And the old African joke was that, when elephants fight, the grass gets trampled. But some wit said, when elephants make love, the grass also gets trampled. So the idea that if you're the grass or the little mouse deer, you get out of the way and you just have to be very nimble and adaptable to this war of elephants. And I think the big picture at this point of time is that we've moved from a phase of, there was a shining, house on the hill preaching and, not exactly perfect, but at least broadly practicing global peace and prosperity. And now, kind of make America great again means that everybody else must look after their own interests. So everybody's become more transactional, more selfish, and they have to look after their own interests. So that's my broad summary of where we are right now.
So how does Malaysia and Thailand and Indonesia try to remove itself or de-risk itself somewhat from its long embrace with the United States? Does it de-risk by embracing China more strongly?
The first thing you need to remember is that risk cannot be eliminated.
Sure.
Risk can only be transferred or hedged or shared. Okay? The risk is always there. The risk, I'm beginning to see it from a complexity point of view rather than a very narrow, kind of Nobel Prize the financial definition of risk. The risk is inherent in the system, and when the system is changing from one order to the next, you get into a phase of chaos. You have emergent properties, and the parts which are part of the whole get affected by the whole, and the parts are, the smaller you are, you do not realize you also have impact on the whole. The best example being the COVID virus. One small virus can change the world, and so small countries, have their impact, but it's not so obvious because they are very small. The big boys are very obvious. So the strategy, to a large extent, is not about total de-risking. It is looking at risk not just as a challenge, but as an opportunity. And I think you have to see it in global context. And the global context is that for ASEAN, which is a relatively small group, but is a very powerful group because it has been the fastest growing group since the Asian financial crisis, 1998, and even before. But so the 98 crisis was a bit of a blip. It is demographically very young. It's nearly 600 million population, 700 million population. It's moving very close as a group to roughly, sort of $6-7 trillion GDP. It is very well educated in the sense that the youth is very mobile and tech oriented. A number of them are moving very rapidly into middle class. And at its top end, Vietnam and somewhat Philippines, moving towards 6 to 7% growth per year, which is very healthy compared to the rest of the world. And ASEAN, so therefore, is sitting right between, if you can call it, three great powers. America on the east, north is Northeast Asia, which is the very technologically advanced, high income, lots of surplus resources, but aging very fast. On the west, you get India, which is another 1.4 billion, but also Bangladesh and Pakistan and in the Middle East, which is also young demographic growth, but needing huge amount of resources, but also culturally affiliated because of history, right? As you know, the Indian civilization moved eastwards, and you can see the vestiges of Hindu civilization in Bali, for example. The Chinese have been trading for centuries, in fact, millennia, with Southeast Asia, but they never settled down here permanently. So the ASEAN sees itself as a kind of a balancing power, and therefore they realize they provided they maintain itself as a zone of peace and neutrality, then it will continue to grow.
So you think that the ASEAN community could de-risk somewhat the United States by integrating more with North Asia, China, and perhaps India?
Well, the trade with North Asia and South Asia is inevitable. That's even historic, right?
Sure.
There's no doubt in my mind that American market will remain very, very strong one because America has built the whole supply chain logistics rules and the dollar infrastructure that cannot be replaced overnight. But the higher tariffs you put on the thing on trade, and the greater the uncertainty of being sanctioned because of either that trade or sanctioned because you are trading with somebody else, require you to not de-risk, but actually hedge your risks elsewhere, right? So you
Diversify.
never, the first rule of economics is never put your eggs in one basket. So America will remain a very important market, but if you look at what's happening with America, is that it's moved very high end in technology, but by demanufacturing, actually there are not many American consumer products that most of us in the rest of the world would use, right? And American products that are still brand names are de facto manufactured in Japan, Malaysia, Indonesia, somewhat in China, et cetera, et cetera. So to a large extent, America has, moved into the first service-based economy, by, demanufacturing, deindustrialization, but have come to realize you may have overdone it. And so one can also explain the idea of tariffs as the protective wall for America to remanufacture. And that's not a bad thing. I mean, every country should have their own domestic national security in food, energy, critical minerals, etc. But the problem is that if these are done through weaponization of rules or of trade, of finance, etc., the key question that everybody else around the world is that, I use the sailors' way of thinking. In the past, all I have to do is to throw one anchor out, and one anchor is more than enough, and that's the dollar. But today, if the dollar is in a kind of a wobbly situation, you have to throw out other anchors.
Well, and in particular, with the dollar being the world's currency and the Congress passing the big, beautiful bill, it guarantees to put a couple more $1 trillion in the deficit. So,
That's right.
And
That's
we
right.
have a president who wants to totally politicize the Federal Reserve to give them low interest rates to reduce the burden of the debt. It's not surprising that central banks are putting a little more gold into their reserve position and otherwise diversifying a bit.
Well, the point is, you see, if you really look at a pure economics point of view, putting money back in the US dollar has, for an asset manager's perspective, superior total returns in terms of liquidity, risk, and store value compared to any other currency, the euro, Japan, renminbi, the United Kingdom. And the reason is very straightforward. The United States is the only stock market superpower. China, India, Japan, Europe, United Kingdom, essentially are still bank-based economies. And they never quite understood Wall Street finance, including Silicon Valley finance. And so, whilst everybody was in fintech, America went tech fin, the monetization of technology, which, is amazing because the Magnificent Seven created, from, next to nothing to 30% of the market cap and 50% of the growth in the stock index. And really about 17, $18 trillion since the COVID. Whereas fintech, which everybody was focused on, the application of technology to finance, only narrowed the spread, made banks less profitable, did it through bigger scale, which required central banks to bail them out in case of any wobbles. And the annual revenue from fintech is about $380 billion, which is nothing compared to the 18, $19 trillion that, Magnificent Seven can create.
Do you think that China and the United States will be able to keep on pausing their tariffs for the 90 days and 90 days and 90 days, or do you think it'll break and the tariffs will really be imposed? And,
Well, I
and
think,
minerals extraction will, the rare earths will be cut back and so on and so forth.
well, I think the old saying was sticks and stones can break my bones, but words don't hurt me, right? I mean, the calling each other names won't solve this problem. You have to come to a compromise sooner or later, right? That compromise is not necessarily a full deal. It's basically a pause, so that each side can get their act together. Put it this way: you're just buying time, right? And so the key question is, will these 90-day extensions solve any problem? And the answer is probably not. I think the businessman has factored this in. Whether the stock market has factored this in, I'm not so sure. But if there was a real trade stop, how much will that damage the earnings that underpin the stock market? Is somebody that's beyond my pay grade. Put it this way, I don't know how to calculate this. The Chinese so far, the economy has a lot of problems, but actually, if you really take a step backwards, you would realize that the Chinese went overboard on the real estate market. Then they cut the banking system, cut the resources to real estate, so real estate dropped. And then the money that, where does the money go? The money went into manufacturing. And China ended up kind of phased out of the real estate bubble into a manufacturing powerhouse that, scared, the daylights out of everybody, which goes to show that when elephants adjust, even with good or bad intentions, there will be global consequences.
To summarize and to close up, you're optimistic about the future of the economies in Asia in particular, it sounds like, and you're optimistic about the evolution of the global economy in spite of the change in the environment, moving from multilateral rules-based to United States-driven, transaction-based, unpredictable processes.
I am, because I finally thought through what has happened in the world. Because the science has allowed solar energy to be cheaper than fossil fuel, it is now possible for emerging markets, countries, to actually just tap their sunshine and become much more self-reliant, and in doing so become more green and inclusive. So that model, very much thanks to the American period, gave technology freely to the rest of the world. And so we have now kind of found a way. Now in ASEAN, I believe, that the leadership still cares very much about the people. And if they learn this opportunity, the downside risk is, balkanization of Southeast Asia. Now, that is a big risk which we have no control over to some extent, right? If outside powers intervene largely in the domestic politics and make it worse, then we would end up being the Balkans. But I think we have a window in which we can use that opportunity to self-strengthen, go find ourselves an inclusive green path of development, and then maybe change the whole ballgame. I mean, the world will be far more equal if, ASEAN becomes much more prosperous and becomes one of the more balances in the system. That's my optimism.
Well, I was in Malaysia as a Peace Corps volunteer when ASEAN began in 1967, so I can remember the aspirations, and it certainly is in a high growth potential improvement of relations between each other. And I join you in wishing for this great outcome. Andrew, thank you very much for joining this conversation, and I look forward to seeing you soon.
My pleasure, and thank you for allowing me to be on this podcast.
Hosted by Dick Drobnick, the Asia Pacific Business Forum podcast is produced by Dan Griffin of GG Films.